Oh, hi, and welcome to TTMA, the chart analysis channel. Today, we're diving into the gold markets. Gold reached a new all-time high last week in February 2025, but this may also mark the end of a long-term bullish phase. This means we could see a significant correction soon. In this video, we'll analyze the current market position and explore with various indicators how deep a future correction could go. For context, the gold market is currently valued at nearly 20 trillion, which is the equivalent to 1/5 of the total global stock markets. When it comes to individual assets, whether stocks or crypto, gold is the single most valuable asset in the world. Gold's price is measured in ounces, a term you're probably familiar with. 1 ounce equals approximately 28 grams, 28.34 grams to be exact. Right now, as you can see, the price is around $2,900 per ounce. That means 1 gram of gold now costs over $100. This has never happened before, until last week. Let's start with the monthly charts, where each candlesticks represent 1 month. We're looking to gold's movement from around 2008 by the subprime crisis to today. From 2006 to 2023, gold formed a symmetrical triangle pattern. It looked like this. This is a very common pattern in financial markets. Here, we see this triangle pattern in real price movement with 2 blue trend lines converging. One key difference between the theoretical diagram and the actual chart is the number of waves inside the triangle. They can be 3, 4, 5, 6 or more waves. In the example diagram, we have 5 waves. In gold's actual charts, there's only 3 highlighted in orange here. We also identified the breakout point, where gold broke through the trend line. After that, gold performed a retest. This is a healthy confirmation of the breakout, as the previous resistance, the blue trend line, now acts as a support before continuing the uptrend. These patterns allow us to predict an upside target. First, we display the maximum heights in the triangle at this level marked in an orange dashed line. Next, I draw a green arrow from the lowest point of the triangle to the highest level. The final step is to clone this arrow and place it starting from the breaking point marked in pink like this. We find here the calculated targets around $2,900 or $3,000, which is precisely where we are today. This strongly suggests that gold might be reaching a major peak and could soon enter a corrective phase. Another reason we expect a pullback is our Elliot waves analysis. Let's remove the previous drawings. To confirm our Elliot waves, let's add the RSI, the Relative Strength Index. From 2011 to 2016, gold experienced a bearish phase. Since then, we've been in a 5-wave impulsive uptrend as shown here. To understand how this works, look at the comparison between these 2 lines, the green one in the RSI indicator and the red one in the charts. You can see that the price is in a downtrend on the chart. However, the purple curve on the RSI indicator shows an upward trend. This means, even though the price is decreasing, there is an increasing strength from buyers. This is a signal of a potential trend reversal. The same thing is likely happening right now. Look at the green line in the charts. It is obviously trending upward. Meanwhile, the red line in the RSI shows lower and lower heights. This indicates that buying strength is currently weakening, which suggests a probable trend reversal soon. Now let's switch to the weekly chart to analyze smaller wave structures. We remove the previous RSI for clarity. Between the point 4 and 5 in green, we should see 5 smaller impulsive waves. We can estimate that the wave count already look like this. When comparing the RSI, we can already count 4 completed waves, and the market is now searching for the top of wave 5 if it hasn't already done it. Technically, this means that we're in a fifth subwave of the fifth major wave, a strong indication that we're near a peak. So both technical patterns and Elliot waves analysis suggest that a major correction is coming soon. Next, let's analyze trend lines. We'll remove Elliot waves to focus on trend substructure. Since late 2022, gold has been moving within an ascending channel. A channel is a price oscillation between two parallel trend lines. Here it is. Just to let you know, we define it by those points of support and resistance. As you probably know, after a bullish phase, a correction phase naturally follows. This is exactly what we should expect after the ascending channel. Moreover, since prices are currently positioned at the upper of the channel, even in the short term, goods should first move down to test the resistance line of the channel. Now, the big question is, when the bearish phase will start and how low could it go? Let's define some key levels. We remove unnecessary drawings, but keep trend lines and switch back to monthly charts for a broader view. The first thing to keep in mind is the breakout of the channel we just discussed, this green channel. The support line has a 95 or even 99% of being broken by gold's price sooner or later. When that happened, it will be a clear sign of the market reversing. Additionally, since the channel is steeply inclined in the monthly chart, we could experience a sharp and potential brutal drop. So how low could this drop go? To determine potential targets, let's use the Fibonacci retracement tool and identify key support level. We measure from the lowest point to the previous waves of the highest peak. Each Fibonacci level represents a potential support zone, but one level stands out particularly strong, this one here, at around $2,000. This corresponds to the 50% Fibonacci retracement level. You can also see it was a major resistance level for 4 years between 2020 and 2023. We can see multiple candlesticks and wicks rejecting this level before it was finally broken, after which it acted as a strong support, triggering a sharp rally. Another possible level is just below, at $1,800. This corresponds to the 61.8% Fibonacci retracement level, a key technical threshold. More abundantly, it has played a significant role in the gold's price action. To better understand its importance, let's switch to the semi-annual charts. In 2012, wicks perfectly tested this level for nearly a year. Between 2020 and 2022, it acted as a strong support for multiple semi-annual candlesticks. This confirmed that the $1,800 is also a critical support level to watch. The $2,000 and the $1,800 levels will be our primary downside targets for the coming correction. To reward those who stayed until the end, here is my quick trading insight to you. Looking at the short-term daily time frame, gold has been moving within a rising channel since the beginning of the year. However, just a couple of days ago, it broke the resistance line on this channel and has already retested the line, a classic bearish confirmation. Now you know where the price is likely going next. For more strategies and insight, subscribe. We'll be back in 48 hours for another analysis. See you soon and take care.